All right, good morning. My name is Darren Richardson, and I'm an estate planning attorney with Eastman Estate Planning in Arizona. Today, I would like to briefly share with you some insights into understanding cost basis and capital gains. Many of us may have heard these terms thrown around by our CPA or government officials when discussing tax legislation, but many of us may not really understand what these things are and how they could affect us. My hope today is to provide you with a simple explanation that could potentially save you a lot of money. So, what is cost basis? Cost basis is the price you pay to purchase a capital asset, such as a security or stock or real estate. When you sell a capital asset, you are taxed on that sale, and your tax liability is determined by how much you paid to buy the asset, which is the cost basis, and the sales price of that asset. So if you sell an asset for more than the original purchase price, the difference is called capital gain, which is subject to a capital gains tax. So for example, let's say you purchased 100 shares of Apple stock in 2016 at $350 a share. Then you decide to sell all the shares today at a price of $600 a share. That's a gain of $250 per share, resulting in a $25,000 overall gain. You have 100 shares of stock at a gain at $250 a share, resulting in a $25,000 gain. Now let's assume that the capital gains tax rate is 15%. That means that you will pay $3,750 in capital gains taxes as a result of that sale. Now, what many folks aren't aware of is that capital assets receive a step up in cost basis when the asset owner dies. A step up means that a capital asset's cost basis resets to the fair market value of the asset as of the date of death of the owner. So this means that if the stock's cost basis resets to a fair market value of $600 per share as of the date of your death, and I inherited your stock through your trust or will, and then sold the stock at $600 per share, my capital gains tax liability would be $0. Thus, if you're considering liquidating stock or selling real estate, it's important to consider the tax implications of doing so. If there really isn't a clear need to part with these assets during your lifetime, you may save a considerable amount in capital gains taxes if these assets pass to your loved ones after you pass away. So I hope this information was helpful to you. And if you have any further questions regarding cost basis and capital gains tax, or regarding estate planning in general, feel free to give our office a call and set up a complimentary consultation. Thank you.